Okay, so welcome everyone. I'm Dan Summers from Boundary Capital, and I'm going to be today talking about our net zero fund, but in the context really of what's happening in the net zero industry, if you like, the climate tech industry in the UK. And as soon as I get the technology to work, okay, there it is. Okay, so we've just heard what's happened at COP27. Some things great, some things not so great. And what I thought I'd do is to highlight the opportunities for private investors from climate change. Showing my age and also my terrible sense of humour, this is about the best I could do with the pun that I had. So comments clearly welcome. But the serious side of this is that you know, there are some opportunities to get involved, and clearly that's why we've set up our net zero technology fund. Okay, so we'll just be quickly going through what's in the bottom of COP27 really, and what are the goals, and how does that actually change the market and change what investors can and will invest in, how that investor can participate, some things about the UK which are very surprising if you don't know, in a good way, and then what is climate tech, which arguably could be up front, but it doesn't matter that it's at the back, as you'll see. There's a lot of differences in the way people talk about these things, but ultimately there's a lot of overlap, and how to get involved. So there were a number of goals at COP27, and they were spelled out like this. I won't go through all the words, but it's really just to give you that there's a complex set of issues through some mitigation, adaptation, the finance and the collaboration, really working together, and how to finance it. And you know, fundamentally, this is really what we need to do. Keep to the target, change the way how we do things, work together to do it, and we need to fund this. And you know, this is the biggest kind of question really. So mobilizing finance, the numbers are absolutely staggering. There's been, the developed nations have been asked to mobilize a lot of money, and you saw there was some progress in this regard, not as much as some people might think. But this is really just the tip of the financial iceberg, and I think very poignantly phrased is that really, you know, somebody needs to pay for all of this, and how is that going to happen, and why should it be the private investor? How can it be the private investor? And really what this comes down to is a series of strategies through subsidies, regulations, legislation, and also consumer sentiment, but harnessing all of these things to create these new markets. And the middle word there, which is really interesting and has been, if you were listening to the COP this year, bankable. So making the prospects bankable. And there's various bodies, the International Finance, God, I'm going to get the name wrong, but the IFC, which is one of the largest banks there, they're at the core of making this happen. Thanks, there's a chat remark, so putting me straight, probably, thank you. The European Investment Fund also has been supporting 5 private equity funds to the tune of 2.5 billion. At the end of the day, if you're trying to unlock $1 trillion, and this is potentially every year by 2030, you know, even if you talk in the billions, you know, you are not making a big splash. But if you make things bankable and you show how it's done, then people in their self-interest can participate and help the climate tech and climate change community for their own financial interest as well. Question about getting copies of the slides. Yes, we can circulate this, and there'll be a recording as well. Okay, so again, some very poignant comments about, really, it's not about begging or asking for money. What people have got more mature about is actually how they unlock investors like us on this call to participate and actually to make money out of these fantastically fast-growing markets, because they have to be. You know, an investor will call them a market. You know, if you're at the other end of the scale and you've got floods or an energy crisis, it's not a market, it's a solution, but both sides are pointing to the same goal. And this is really the other side of things. Actually, for sustainable investing as a whole, not just net zero, but as a whole, there is some very real trends for some leading commentators actually that impact and climate tech are no longer anything that needs to carry a discount. If anything, they're the same. We have analysis to shoulder this over a long period of time, as well as these commentators. And actually, in some cases, because of the way the markets are growing, hot opportunities, they can be superior investments in themselves. And if we focus in on the UK government, actually, there's a lot that the UK government, despite the turmoil that it's been in clearly for the past, well, arguably a few years, actually, there's a lot of things they've done right. And they've done a lot of things right in terms of the UK Infrastructure Bank, you can see there with a pretty big number, bringing in, again, like the European Investment Fund, trying to bring in private investors, well, successfully bringing in private investors to opportunities and helping to de-risk and underwrite some aspects of that. There's a green finance strategy, which allows for various projects to take place, which again wouldn't otherwise happen or would have to be at great risk. And I would say on the third level, you know, the enterprise investment scheme, in which we're an EIS fund, and a lot of you around the table will also be EIS investors. It's not climate tech focused clearly, but it's highly geared towards high risk investments, particularly around technology. And you know, our view, and we'll come on to this, is that solving the climate tech challenges that we have, yes, money's got to go into projects. Technology, you can't eat technology. Technology itself can't stop floods. It can't prevent energy crises. Those are projects, and those are the big solutions. But clearly, we need to do things differently, and technology, disruptive technology, enables us to do things differently, in some cases incredibly differently, and create these some of them new industries themselves, and not just new products to solve some of these challenges. We think about things like green hydrogen and all kinds of reactive, basically fusion technologies, etc. We need to unlock these, and these are purely technologically driven. And if we look at the UK, and it's, if you like, climate tech unicorns, what do I mean by that buzzword bingo? Hopefully most people know that a unicorn is something that came out of Silicon Valley, meaning a private business that's on a high growth trajectory and worth $1 billion or more. And the climate tech angle of that is a subset that are broadly addressing the themes. And you can see them here. There's some incredible companies. If you haven't heard of them, I suggest you have a look at this and have a look at them later. Sometimes there's a big company that you've never heard of doing something incredible behind the scenes. We've got electric vans and trucks, which, you know, is no mean feat. Electrifying cars is difficult and challenging enough, but to electrify all of those vans that we now rely on with our new lifestyles post-COVID, there's a whole new infrastructure and a whole lot of diesel and carbon fuel that needs to be displaced. Both in the truck field and in the aviation. This is a great British electric aviation company. These two energy companies probably you would have heard of because they're customer facing. These companies are very disruptive around fuel cells and around making green hydrogen. So harnessing the power of hydrogen as storage and using electrolysis to generate electricity. And British Volt, you've probably seen in the news. It's had its challenges, but ultimately it's very successful in the field of batteries. And then these other ones, smart metering, you may have seen this, but it's been a fast growing company. And this one, Nucleo, which has its some roots in continental Europe, but it's a UK headquartered and funded company. And the name, the way it's spelt, you probably can guess, but it's modular small nuclear reactors for distributed nuclear power, which, you know, if we look around the world and we look where the renewable energy is going to come from, you know, this is something which is a really serious contender. And these are all UK companies, and they've all only been here for past few years. No one's been, I don't think, longer than a decade, and they're already at $1 billion. And these are the sorts of things that, as a private investor, you could have invested in. We could have invested in. And they're clearly at the, you know, extreme sort of rock star end of things, but it does show that the UK is doing something very, very well. The appetite here for raising money and investment is very strong. So I'm just going to, and if you want to keep the comments flowing in, if they're relevant, and I can multitask, I'll answer them in the moment, but otherwise we'll save them at the end. But yeah, what is climate tech? People use clean tech and climate tech sometimes interchangeably. And there's just a bit of a note there really, is that climate tech is more focused on decarbonisation, whereas clean tech, I mean, clean water has nothing to do with decarbonising, but we need it. Cleaning up the environment is nothing to do per se with climate tech, but we need it. So there is no judgment on what's better or worse. They're clearly all necessary. Climate tech is the very specific thing that, you know, we are living on a planet that is cooking, and we need to slow down and reverse that very, very quickly, even if these other things have got a chance of succeeding or not. So from our point of view, it's high priority amongst all the other clearly very high priority things. So, you know, you can take a view about all these things. Okay, and the what you can also see on the right hand side here is global investment in the different sectors and what they all mean, and you can see that energy, but there's many others in the particular in different areas, and there is a lot of interchangeability and overlap. You can see there's a sort of agri-tech bar, second one, farming. Clearly there's a lot of decarbonisation that can happen right from the get-go. Not just cows farting, we're talking about everything all around the way that palm oils and all the other things are, or biofuels are recycled. Some of them, they sound great, but when you look at them, the carbon cycle is not even neutral. It may be less worse than what's going on at the moment, but if we want to hit net zero, you know, we need to do some radical things quickly with the land mass we have, and there are some very interesting solutions out there indeed. So the other thing really is to look at how the UK fits into this, and this graph is dominated by the US. One would expect that to be the case, but the UK being second only to the US is still incredible, given all the turmoil that we faced, given the fact that we are one of the worst performing countries in the G7, and that, you know, there's been so much structural upheaval in the past few months with what can only be described as kind of chaotic government. Through all of that, clearly we're very good and very stable at this kind of stuff, particularly early stage investment. And our commitment to climate tech is cross politics. It's been quite deep in the UK culture, I think. Arguably it could be better, but, you know, I think it's something we can be very proud of, and it's something that we're building on. So and you can see the figures are absolutely astronomical. 83% year on year, 79% CAGR over the last 5 years. If you can picture where you were 5 years ago, were you talking about climate change? Some of you might have been, some of you might not have been. But for these markets to be growing and for us to think, well, can and should I participate in this? Could this be financially rewarding? I mean, this is the amount of money going in for sure, as opposed to the returns. But, you know, there is a lot of people out there piling in, and they're doing so for, these are all commercial, professional decision makers. So that's pretty positive. And what I'm going to do next is to talk through a couple of live examples of what climate tech actually means. So we do have a question in coming that I think is relevant. At the other end of the scale to unicorns, do you have to invest at pre-revenue stage? What stage is best for investment? And we've had some other people say ditto. So I think this is a popular question. So I think this is, if I bring that theme, so do we have to invest pre-revenue? How do we get on the train? I think probably, if I can just paraphrase that question, because clearly if you're investing in a business that's worth $1 billion, you're not going to buy very many shares. And is it going to double in size next year? Well, how do you even participate? Who knows? What we've got is on the screen is a business called Ekion Technologies. I would bet that none of you have heard of them yet. And I would also bet that some of you may never hear of them because they're not a consumer-facing brand. They are a Cambridge spin-out that's invented a new material that goes into batteries that essentially makes the battery life, multiplies the life by several factors, and increases the power density of batteries as well, with lithium ion. So with the most most leading sort of accepted technology. And it started clearly with no revenue. It started as a bunch of scientists it is now at the stage, as you can see, where it is got customers, big name customers as well. I mean, Morrow again may not mean anything to a lot of people, but that, and there's some other more famous technology companies that we're not allowed to talk about. And it's also raising a lot of money based off those success because it's growing quickly. So to the question about do you have to invest pre-revenue, some of these markets are early, so some of them will not have revenue, and some investors will take a bet on those. Our style is to try and find businesses that do have some validation, be it revenue or some other form of validation that revenue will be forthcoming. Obviously, the different investors you can try and participate at different stages of the chain, the value chain. EIS is there to help de-risk, which we'll come on to later. And we invested pre-revenue in this business because we were very convinced by our due diligence that there were customers, there was a market fit, and that people were knocking on the door if they could do what they said they were going to do. And then it was a question of doing technical due diligence to see if they did. So hopefully that's a way to link a very specific case study to the question, which is a very good question. And ultimately these things will go on, and it is starting to make money. We'll make more and more, and it may grow to a unicorn. Of course, we can't predict the success of this business. It's high risk, high return for a lot of early stage companies, but it's certainly one that we're very pleased with, and it goes from strength to strength. What I'm also going to talk about really is kind of move into the way we see the world and our fund and our product. And very happy to be challenged on this. There are many different ways to invest in climate tech companies. We call our fund the Net Zero Technology Fund, and we're looking for, as you can see, sort of the name sort of captures it all, but we're looking for businesses that really help to decarbonize the planet. And that can really mean a lot of different things. It can mean doing things much more efficiently. We don't just mean a little bit, we mean disruptively efficient, or changing the source of carbon so there's actually no carbon, or even helping to take carbon out of the environment. Ultimately, at the end of the day, you can either put less in, take stuff out, or do things in a way where you use less. Those are really your three possibilities, and that's what we look for a material change for. This is some of our anonymized deal flow. It's a long list. There is a lot of opportunities, some out of universities, some out of hubs, some one we've come across, which was a spin out of an oil and gas company, actually, funnily enough, with some entrepreneurs that were able to, they left with their idea, and they recreated the technology, and they've managed to go on to successes. And we'll just go through a couple of examples so you can kind of see the diversity of the sorts of businesses that we'll invest in. So mechanical battery, what does that mean? It's got a flywheel, so literally a wheel for those of you who studied physics or know a bit about angular momentum, in vacuums you can keep things spinning for a very long time, and they can be sources of power without using any rare earth metals, without using anything except a big, heavy, or heavy in the inertial sense, flywheel. And it has a multitude of uses. This one is specially designed for smart cities and microgrids, so that's very exciting. There's one which is biogas mini engines. So there's a lot of diesel generators out there in the world for temporary markets, and as well as both in the developed world and developing markets. These are vital for anything from mobile phone masts to houses and homes to temporary disasters to some people, for it's a long-term solution to if you're off grid. And actually, by using a mini engine, you can have the capability, but you can have it in a dispersed way. And then there's one which is a very high efficient process that's a university spin out that makes green hydrogen, and it makes hydrogen in both the anode and the cathode, if you like. It's not quite that simple, but if you kind of remember your physics, or if you know this area, how can it make hydrogen at both electrodes? And the answer is it's a trick. It's a clever trick. It uses chemical looping and a metal oxide catalyst, which essentially means that it's producing in the reduction phase as well as the oxidation phase, and that boosts the efficiency to 90% of the overall system. Most systems are at the 70% mark. So given that green hydrogen, if those of you follow the trend, even if you make green ammonia or some of these other high power density carbon replacement fuels that we're going to need, we need to get the price of green hydrogen down below $1 per kilogram. It's currently about 10 times that. It's not commercially viable. So clearly legislation and other things, it plays to the themes we talked about earlier, but also it can enable it to really happen. So really, I kind of want to summarize and then hand over to some of the other questions that are coming in. But this is the key features of our fund and the way we see the world. It's a knowledge intensive, KI, that's what that stands for, EIS approved fund. So we'll talk a bit about what that means in a second. But yeah, well, okay, there you go. The effective tax year is fixed. So in other words, for March 23, when the fund actually closes for new investment at the end of March 23, then that is your tax date. So we go on to make a number of investments afterwards, but you have certainty on your tax date, and that's a nice gift from HMRC. We can do our business without having to gamify the system or look for suboptimal businesses. It's a really, really good solution, but there are criteria about how technologically capable the investee companies have to be. So we have some strict criteria there, which you don't need to worry about, but it plays to our strengths as technology investors. 100% of the investment is eligible. As you can see, there's no fees from investors. We do charge the investee companies, and that's something that they are happy to do. We add a lot of value where when we come in. We have technical expertise in many of these areas, and it means that all of your money is EIS eligible. There's a minimum ticket size, you can see, and we have a portfolio so that your risk is spread amongst different opportunities, and that's our close date. So that's kind of finishing on what we are and what we do. So with the 7 or 8 minutes left we have, thank you very much. Let's see the questions that have come in. I have Ekion in my portfolio. Okay, all right, great, thank you for that. And nice to know that someone else has also heard of the company. What does high growth mean to you? Fast growth or patient capital? Okay, this is incredibly interesting. I don't know if there is a right answer here. There'll be a few views. For us, we are looking to exit our investments within a 5-year time frame, and that means we want to pick an inflection point where there's a certain balance of risk and reward, and we want to exit, because liquidity in private companies, for those of you who obviously experience and do or don't know, is it's a thing. You need to get out. You need to actually get someone to buy your business at the end of it. In that 5-year time frame, aligning with the founders, if they started at $1 million, do they not want to be at 10 million, 100 million of value? Like, what is their exit ambition? Do we think we can get there? So for us, I wouldn't say we're particularly patient. 5 years one might say is long enough, but given that 2030 is just around the corner, and also that investors also want their money back, and even if they invest with us again or something similar, 5 years is still a particular time frame. So we have our own timelines. Therefore, we're then almost self-defining high growth as getting an exit of 10x at least. Every business we invest in has to be 10x, and hopefully that answers your question about our viewpoint. What's the balance in pounds between the benefit to net zero technology and the company and the benefit to the investor? So that's really interesting. Hopefully there is no trade-off. Hopefully the companies are saving carbon and making money, and the investors also making money. I say hopefully, that's our target, and so far all of those things are aligned. We are not looking for greenwashing. We are not looking for a company that does something that's irrelevant, that then needs to buy carbon credits or to absolve its sins in some other way. These are the companies that are absolving us of all of our sins, inadvertent or otherwise, and keeping our planet to a livable by us and our fellow species. So it is absolutely aligned that the investor should make money when the company makes money, when the company saves carbon. And that's a really good question, not incredibly intuitive. So hopefully, thanks for bringing that out. What gives the UK its edge? It's a really good question. The legislative framework is very strong. There's a very, very large investment community here, venture capital community that's always been here pre-Brexit and is not shown too much signs of leaving. France and Germany have caught up a little bit, but to put it in context, our venture capital industry is still twice as large as Germany's, which is the next largest. And then climate change, climate tech is kind of similar. But I think it's deeper than that personally. If I look at the countries that are good at this kind of stuff, Israel is right up there. It's a tiny country. America's really good. Obviously, there are great stuff coming out of China and other countries, but I just highlight that there's something cultural about innovation and the number of patents per population. We have a very innovative population, and we have an industrious population. We have we have a venture mindset, I think, that may not be prevalent every day if you read the news, but it is there deep culturally, and I'm very proud of that. So yes, there is good opportunity, and that's my simplest answer. It's a really good question. Are we involved in the carbon credit validation space? If we saw, it's a really good one. If we saw something that enabled real carbon credits or something credible, but our view about carbon credits is unfortunately very, very bleak. There are some awful things happening in the name of carbon credits. Forests that are being destroyed not quite as quickly as they would have been, apparently, and that's classed as a carbon credit. And when we fly around, for those of you who do fly around, there is clearly there's nothing you can do. That plane is destroying the environment. Buying a piece of rainforest somewhere else is not necessarily going to solve the issue. So we clearly take a very dim view about greenwashing, as you can tell. Clearly there's a debate there, but we focus on technologies that really make a difference, that are actually doing something, that are changing the world. So yeah, sorry if that's a bit ranty, but that is how we act and feel. Last question I think we've got time for, but a good one. Are exits still oh, thank you. Okay. Thanks for the response. It's nice to be agreed with when it's a bit one-sided, because we can chat back, but it depends how fast you can type. Are exits still likely in your time frame with the VC funding downturn in the US? This is a really good question. The answer is we don't know really, and we have to be honest about that. We say 5 to 7 years. We give ourselves a couple of years backstop on our funds because things can take longer. We are entering a recession. Whether that recession is, there's a lot of great startups born in a recession. A recession ultimately shouldn't get in the way. In fact, sometimes it's beneficial because everyone else loses their shirt, and the most efficient disruptive player wins. But clearly, if there is a slowing down in funding, it can impact. So I would say we don't know. We haven't seen any signs yet, but we wouldn't be so foolish as to be to say it won't affect us. What I think we can say is that this is a hot issue. The whole world's focusing on it. The money is only increasing for this area, regardless of the overall amounts that do waver from year to year, as you see in this graph, and we're only seeing that increase. So we think the sector is hot for years to come, and that's why we're in it, as well as being passionate. And we really hope that people here also passionate and want to make money and also do our bit. So so with that, more questions coming in. Thank you very much for all of those. We've got to draw stumps now, but appreciate your interest. We will circulate this afterwards, and thank you very much, and have a great rest of your day.